The Facebook face plant continues. The social media giant under pressure today. It is down more than 8% in November and set to close its third straight month in the red. That would mark its longest monthly losing streak ever. So does Facebook need fresh faces in the C-suite to get it out of its slump? Our Julia Boorstin joins us now with more on that. Julia.
Well, Melissa, despite some calls for Facebook to separate its CEO and chairman role and to reevaluate management at the top, we are unlikely to see major changes because Mark Zuckerberg controls the company and he expresses support for COO Sheryl Sandberg. Stifel analyst Scott Devitt saying, quote, excluding a major management change, Facebook is potentially looking at a multi-year reputational turnaround fraught with execution risk. Now, Sandberg denying the New York Times reports of mismanagement, saying, quote, to suggest that we weren't interested in knowing the truth or we wanted to hide what we knew or that we tried to prevent investigations is simply untrue. Now, there are growing calls for regulation. Senator Mark Warner saying he's disappointed with Facebook's management.
I think there are ways we can find common ground, but they've got to come to the table. So far, what they've said is, yeah, we want to work with you, but when we get to specifics, there's not been a lot of give on their side. The notion that the wild, wild west days of no regulations at all, no guardrails, just can no longer exist.
And yesterday, Warner's fellow Democratic Senators Klobuchar, Blumenthal, Coons, and Hirono wrote to the Department of Justice urging an expanded investigation into Facebook and Cambridge Analytica for reportedly, quote, hiring partisan political consultants to spread disinformation about people who have criticized Facebook. But J.P. Morgan's Doug Anmuth tells us he doesn't think the New York Times expose will make regulation more likely, and he already is seeing Facebook and others change their business practices to comply with European privacy laws. Melissa, there's a lot of talk that those privacy laws could at least give some guidelines of what we could see here. Back over to you.
Julia, thank you. Julia Boorstin in Los Angeles. So does Facebook need some fresh faces in the C-suite? And even if it does need them, is it likely to happen? Julia had quoted this analyst, Scott Devitt, at Stifel. And ironically, even though he said something to the effect of fraught with executional challenges for multi-year period, whatever, he has an outperform rating on the stock.
So here's the deal, and I'll tell you why that is. First of all, there will be no changes. There may be a scapegoat here and there. I'd be very surprised if it's Sheryl Sandberg, and it's not obviously going to be Mark Zuckerberg. So any changes they make are not going to be really particularly impactful. Here's the most important thing. All of a sudden now, he still hasn't outperformed, but expectations for next year have gotten so low that earnings growth is expected to be flat year over year, despite the fact that sales are going to gain 24%, or at least that's what analysts think. So it's all the spending to combat all this sort of stuff. That could be way overly pessimistic, and then the stock is way too cheap.
Go ahead, Tim.
But yeah, I mean, look, this is a corporate governance story. It's been a corporate governance story for 9 months. Dan, you're reading my op-eds on this. The bottom line here is
CNBC.com, by the way.
CNBC.com, and more importantly, really where people should be going to read this stuff. But the bottom line here is this management team, the market is essentially telling you where things are going in terms of GDPR and data privacy issues, and it's existential to their business. And so if you don't think that Facebook doesn't need to make changes or at least to institute some different type of governance, it's interesting that the Times and the Wall Street Journal are now picking up on this, but the market has been telling you this for a long time.
This has been a corporate governance story since the company went public. I mean, the share structure, the fact that ESG funds all of a sudden now are saying, oh, there's a problem. Right. How are you even invested in a company that has a share structure that allows the CEO and the chairman not to be split at all by shareholder vote or to be replaced by shareholder vote?
Well, that's a different issue. That's a structural issue in terms of the corporate structure. I agree with you, Mel. I just think that the corporate governance, as it's related to data privacy, communication, how they're handling it, it's been anything but proactive. It's been reactive.